Hi everyone, I'm Max Friar, founder and managing partner of Calder Capital, and joining me is Hannelore Jones, our director of operations. And we've been speaking recently and decided that we'd give kind of this impromptu update on the condition of the market and some things that we've seen change over the course of not only my career, but just in the past few years. And so Hannelore is going to be asking me a series of questions. Hopefully I'm prepared for them, and I'm going to try to give the best answers that I can to these questions.
How do you assess whether a deal is worth pursuing? And then what are you seeing that is killing a deal early on?
That's another very nuanced question. So I'll take the sell side and I'll take the buy side separately. So because we take on a lot of sell side clients where we're representing sellers looking to find the best buyer, and we were representing a lot of buyers where these are buyers that are looking to find the right sellers, for their endeavors, their careers, their bolt-ons, et cetera. So when we first engage with a potential seller, our automatic, the way that we approach that is assuming that they are not well educated on the components of valuing their business, right? Now, some are very well educated and it's a pleasant surprise, but for most of them, they need kind of the education in terms of how our buyers going to look at their business, how our lender is going to look at their business. And so therefore we go through a very thorough valuation and financial pre-due diligence exercise with them. And so this typically takes a matter of 3 to 4 weeks where we're collecting a lot of their information about their business. So financial records, tax returns, operational issues, just really learning about the company so that we can, instead of taking on the intermediary's role, we can take on the buyer's hat, put the buyer's hat on. And then we put together a very thorough analysis for them, looking at a variety of valuation methods. And then we very transparently present this analysis to them. We walk them through all of our financial adjustments. We walk them through the valuation models. We walk them through all the data points. And the point isn't that we are right. The point is that these are the same types of things a buyer is going to do when they look at the business, right? And so if we're trying to give these potential sellers an idea of what they're going to encounter once they get on the market. And if there's misalignment there, very simply, if the seller says, well, I need 7 million to sell my business, and we're saying it's probably going to be 4.5 to 5 based on all the data points, there probably isn't a lot of good use in taking 6 months of both of our time and going on the market to try to make something happen that's unlikely to happen. Instead, what we can do is we can help them understand with that data, where does their business need to be from a performance standpoint to achieve the valuation metrics, right? We talk to them about their deal team. We talk to them about their business operations. We try to just give them honest advice on where they could improve things, to achieve their goals. And we are not looking for the next, we are always looking for the next transaction, but we're not looking for the next transaction that's going to be forced or that's not going to align with what our client wants. So I would say that on the sell side is the most important thing, is aligning valuation, deal structure, process, buyer type, expectations, which we can do all up front with less than a month's time. On the buy side, to flip it over, there are a lot of buyers out there that are looking for businesses, and there are a couple things that we look at when it comes to buyers. First of all, is the focus of their mandate. So a lot of buyers out there will say, particularly newer buyers or less experienced buyers will say, well, I'm interested in all these industries, all these sizes of businesses at all these locations. And where I think that comes from psychologically is they don't want to miss anything. So they say we're open to everything. The problem is, how do you take that type of broad mandate and go start finding prospects? And then what story do you tell those prospects once you're on the phone with them or in meetings? Because if a seller hears, well, my buyer's interested in construction, distribution, manufacturing, 1 to 10 million EBITDA in any state, east of the Mississippi, that does not convey to that seller that the buyer has serious focus. And therefore, they're unlikely to be interested in pursuing that conversation. So we try to help buyers tighten their focus and their mandate up front. Of course, what else are we looking for from buyers? We're looking for available capital, right? They certainly don't need to have every dollar they need when we engage with them, but we have to have a reasonable idea of where the funds are going to come from, right, for these transactions. That's part of the story, right? We want to be able to go to sellers and discuss that we have a well-capitalized buyer. And I think there are other soft signs too that we're looking for. I mean, we're looking for professionalism, momentum, right? We're looking for people that when there is an opportunity, they pick up and they're ready to have the call, they're ready to have the meeting. They're not over-qualifying prospects out of the gate. There's a lot you learn when you just get in a room or on a phone call with an owner that you didn't know up front. And certainly our team is doing a really good job qualifying all these off-market sellers up front, but we can't ask them every question in 30 minutes, right? So looking for buy-side clients that are willing to engage and learn. I think lastly on the buy side, it is really looking for folks that are willing to write offers. I know it sounds a little strange to say that, a buyer would engage you and not write an offer, but getting to that offer stage is a critical stage for buyers. And sometimes they get overwhelmed with, are they making the right offer? Are they going to offend the owner? And they almost get their hands tied. So I think the last thing on the buy side would be a commitment to a 6-month period. We're asking them to commit to working with us for 6 months. If they're unwilling to do that, then it's probably not a good fit for us. The name of the game up front with sellers and buyers, let's take a few weeks up front to make sure that we're aligned on the criteria and the expectations of this process. Because if we'll be very honest with them with what to expect, but they sometimes have never been here before, so they don't know what to expect. So just making sure to do that up front makes it very smooth when we're actually on the market.
Makes a ton of sense. Are you seeing any shifts in buyer and seller expectations as in this current, time frame?
That's a great question. So, I always have a lot of conversations with sellers and buyers, but it's hard to know whether I'm having enough conversations to get a good sample size, right? It seems that there's a theme right now where there are quite a few like tech and or AI-enabled software companies or tech-enabled service companies that are trying to position themselves for extremely high sale multiples that are probably unachievable in the market. So recently I've had conversations with folks that are doing, 500 or 700 or $1 million in EBITDA, and they're expecting like an 8, 9, 10 multiple for their business. And unless it's a unicorn, that's probably not going to happen. So that's a tale as old as time. Many sellers think the business is worth more than it is. Another reason to go through that qualification process up front. And I think with buyers, I think you see tightening mandates. I mean, AI and tariffs have really caused buyers to focus in on, for example, what type of services are going to require licensed or certified people to be out in the field doing something. That we're seeing a lot of focus on that. So, and you could say the home services there. So HVAC's been hot for a while, but roofing, environmental services, decking, siding, landscaping, facilities maintenance, these are fire protection. These are all industries where we're seeing a ton of interest. So for those owners that started those types of businesses 30 years ago, the time may be now. So
makes a ton of sense.
And I would say lastly on that note, buyers, there are a lot of buyers, but gone are the days of like all cash deals and minimal due diligence. I'm not saying that those things can't exist separately, but combined, those are kind of going away, right? Buyers are intensely scrutinizing sellers right now. And I think because of all the risk factors that are perceived out there, they want to make sure what they're investing is something they feel they can grow without worry of all these monsters lurking in the shadows.